did notice that after the stream I did forget to do a recap over our trades, so I do apologize for that, but let's get to it. So let's start off with our first trade of the day, which was the Nasdaq trade. Now, I do see that we ended up ripping quite a bit, actually. In fact, oh wow, we're almost at all-time highs. That's gonna make tomorrow very, very interesting. We'll do an analysis later on what we might see for tomorrow, speaking of after we're done with the trade recap. Now, going back to Nasdaq, ideally, when we started the day, we were like here. This is all of the information we had. So how was I able to identify a solid, confident trade to partake in with the information that we were given right here? Well, there was nothing here giving me any sort of confirmation for a confident trade. Everything that we had in this specific moment was simply accumulation. Now, when price accumulates, its only purpose is to generate liquidity. We are the liquidity. When we enter trades, we generate liquidity. When we exit trades, we generate liquidity. When we get stopped out, we generate liquidity. Or when we take targets. So the whole purpose of consolidation is to create liquidity in preparation for an expansion. Now, that is why often when the market is chopping, or there's time distortion, but mostly when the market is in consolidation, we tend to have a really tough time because all price is doing is trading in a range where its only intention is to wipe people out as much as possible and just generate. Now, when we started the day, we identified this. Price was not doing anything in the mid time frame. Price was not doing anything in the small time frame. This meant that price was simply not supposed to be engaged with, because everything within here should either only be in purpose of a scalp or should be in purpose of should just simply, we shouldn't even engage into it, because this keeps going from top to bottom non-stop, running through PD rate back and forward, and it's really easy to get lost into this, especially if you're stuck in the small time frame. You might see something like this happen and you're like, oh, this was a market structure shift, this was a stop rate right here, this is a 2022 bearish model, let me enter a short. Oh, price closed above, let me close that back in, but since it did an inversion, let me go long right here. Bam, price hold off again, close below. Oh, let me stop out again. Then again, oh, but we made a CB right here. Let me short this. Oh, it's almost at my target. Came right back up, stopped me out. That kind of thing. So all the back and forward is how we usually get destroyed in our accounts, especially if we're trading with high leverage. So, as I've said before, the tip should always be that you measure the range that we're in, or the range that we're stuck, and you don't want to engage into it unless it breaks out of that range. Now in this instance, we were doing some back and forward stuff, and ideally I did mention that we wanted to see this CB be broken to look for longs. Now, if that CB was broken, we would have made a nice move set up to prepare for the midnight move, which we actually did hit midnight, right around there. Now, since that was the only thing that we could play with, or if price were to sell off, we needed to see it invalidate the 5-minute busy right here to look for shorts. This was pretty much our thesis. Do not engage unless accumulation is over and price starts to expand or starts to aim for a delivery. We waited for price to do a couple more things, and then eventually, as things went on, we invalidated our PDRA here. Now the reason I didn't go long here was simply because of terms of risk to reward. For me, if I had decided to trade, I would be aiming for a 6-point target, but I would be putting myself at a risk of 7, around 7-ish. And if price were to go here and do some nasty stuff, because of how I have my candle close management when it comes to losses, it could have been potentially even more than 7 points. And at that means that I'm having a negative R2R, which is not ideal at all. So that's why I didn't engage in longs despite that. But what about after it tapped midnight? Well, at this point, it's important to notice a couple of things. The AMD model. When price accumulates, it may often do a manipulation first before the real move. In this point, we had a ton of accumulation, so a lot of consolidation, and then we made a displacement higher to go for this significant area. Now, the cool thing about AMDs is that they always tend to manipulate to a specific interest point, either be a liquidity level like buy side or sell side, or potentially midnight New York Open PMO. I have not seen exactly many happen with 953 or the root candles, but I'll have to keep an eye for that. And that's when you can potentially tell if it's going to do an AMD. In this case, we tapped midnight. Okay, what is our key PDR8 in this area? Since we hit midnight, we need to identify the area that it's very likely to retrace to, and that from that point it has to hold for continuation, or it could potentially mean that the trade will fail. So for our longs, we wanted to see price come down here. We wanted to see this respect this, so that it could lead to continuation even higher, if this wasn't an AMD. But if this was an AMD where we just finished accumulation, we manipulated higher, then this should fail. And if this fails, we can use the inversion for it for the true delivery, which should be lower. That's exactly what we waited for our trade. After midnight was hit, price came down, closed underneath it. Alright, we waited for the retracement. There was our retracement. We entered our short, and we simply rode the move down to the highest probability target, which was the sell side at that point. That's where we did our first scale out. So, the highest probability target was taken. What made me confident to hold for more? Well, if we look at high time frame, at that very instance, we did a massive rip up without ever really retracing into a discounted area. So, if we were to retrace at a discount from this range that we made in the hourly, equilibrium is around here, and this is why my great target was equilibrium itself. But doesn't mean it necessarily has to hit. There's been plenty of times that price has reached a certain area and when it retraces does not come into discount. But it could definitely hit the hourly fair value gap and that be everything it needs to go even higher. And that's why my second target was this hourly low right there, which also happened to be a 15-minute sell side. That's why I held confidently believing that price was going to do such a thing. And that's exactly what it did. Now, if I had been completely right in my idea, this CIVI should have been respected and we should have had continuation towards the equilibrium. But that wasn't the case, and after we scaled out majority, our runners got stopped out. Not bad though, as this was a nice 65-point trade with little to no drawdown. And we were able to hold it and have a nice run, while also being able to identify other opportunities elsewhere when price started to do different things. Now that was the recap I'd say for NASDAQ, and a thing to just keep in mind is always be patient if you don't know exactly what price is going to do. In this case, I had no clue what price wanted to do because of the accumulation that we were making, so I needed to wait for something very specific to happen to give me that trigger to participate, and that's where we actually find our best trades. I myself tend to self-sabotage a lot. If I were to put it plainly, the reason I'm not as rich as LMT or Amnaj or anyone like that is because I self-sabotage by being tempted to take mediocre setups. But you guys can clearly see the difference when you're patient, you wait for the model to display itself, you wait for all of the key signatures to appear, and trades tend to run a lot smoother and tend to be a lot faster that way. This was a high confidence trade based on a lot of confluences that we had, but it was all thanks to us being patient and not being tempted to take any of these small moves in between. Now in other days, NASDAQ will definitely be a lot more tricky, especially with its hidden intention, because there's times like right here, right? At this very instant, it was hard for me to do anything because, well, I was on my phone at that point, but Nasdaq was moving up, ES was making lows. That right there is a form of distortion where one of the indexes is lying, and the true motive of which one is really making a move is hard to tell. But I believe it was maybe with JD that you guys caught longs for even greater move higher after the structure for the bearish downside was completely broken. Can you guys still hear me well? Okay, perfect. Now, what about the gold trade? The gold trade was a more interesting one because it happened more of in an instant. I saw that our dear member Jaws had mentioned, hey, does gold look like it's about to sell? And the moment that I switched to gold, I immediately took the trade because I saw the setup visually and I was willing to participate into it before even talking about what the thesis was. Now, what did I see in gold in that very instant that gave me the confidence to enter short? Practically in like an instant. What was the confidence for that move? Well, it all goes to seeing going through different time frames: high time frame, small time frame, medium time frame, and then seeing the invalidation of a previous setup. Like we talk about those 8-tier setups that we did in that other video. So, gold had hit a 4-hour volume imbalance. This also happened to be a 1-hour volume imbalance that gold hit, which also happened to be the weekly open. Okay, we hit the weekly open. We took out, as we hit the weekly open, the previous external buy side at the same time. So, if price were to retrace, this would be a solid area to start the retracement, considering that at that point we were in a bullish. Let me just push this a little bit back. At this point, this is all of the information we kind of had. So as we know the idea behind premium and discount, price up here, it's at a premium. It hit a buy side. It's at a very extremity. It has a solid probability, if we're bullish, to retrace into a discount and continue going higher. But if we're bearish, this could be the top where price would now start a sell model to start going for sell side liquidity. So both sides of the coin make it where shorts are higher probability just thanks to the high time frame and mid time frame. At that very instance as well, price, when we looked at it right here, had made a 1 minute 2022 model. Here was the liquidity being rated, here was the market structure shift with displacement, and here was a fair value gap being made. So if we have high time frame and mid time frame confluencing where this could be a potential top and price could retrace either to a discount to then rip or reverse, we have good odds to find a short setup here. Now, when we engaged though was in a particular moment. We engaged right around here after price inversed this busy. Why here and why not wait for it to come right back up here? Simple. The very fact that price reached into this fair value gap, took out this high and came right back down and invalidated the busy, told me that this was an inducement. And like you guys know from a lot of my different trades, when we trade inducements, after an inducement happens, we tend to put our hard stop at the low of the inducement or the high of the inducement, or straight up at break even if we entered on the inducement. Because ideally, when it happens, they are supposed to be protected. It ideally should not come back into that area, especially if it's a proper inducement. So if that's the case and this led to instant invalidation, that means that this area is most likely not going to come back into. In addition, the fact that it firmly just invalidated this PD array is telling me that it doesn't really have that much strength to be holding right now. Now, as I did mention, however, there was the possibility that it was just a retracement. That's why, to me, this 5-minute fair value gap right here was important for us. If price had reached this 5-minute fair value gap, there was a chance, right? If this is retracement, it's gonna rip. But if it's invalidation, then it's going for our target, which at that point I was aiming for this low. Although it could have just completely ran towards here, this was the target that I would have been satisfied with. With that in mind, we took our short right there. Once price took out the low, we saw it reflect, we saw it pivot a little bit. We put our stops at even to avoid any risk. And then price proceeded to continue delivering lower after invalidating the fair value gap until it hit our target, making it a very nice trade. Little to no drawdown, although it did look a little bit sketchy after it hit the 5-minute fair value gap. But the PD raise that we needed to be respected was respected and delivered as it was supposed to. In fact, it even went even lower, but at that point I was already out, so I wasn't able to do anything there. Oh, it actually even took out the sell side. Well, that is definitely expected. And yeah, that would be the recap of it. Now, because of my experience with my system doing it so many times, I was able to see all of this in an instant, and that's why I wasn't able to explain it or anything like that. When we saw it, I just, oh, okay, it's happening, managed to get in. But this is something that comes with time, the practice of just being able to see all of this in an instant. It definitely, I would say, again, this is all a tier sort of analysis where you use the high time frame to tell you a story, you use the mid time frame to give you a structure, and you use the 1 minute time frame to give you an entry. What I did learn from gold is that the 5-minute time frame tends to be like the really key structure that respects and everything like that, more than Nasdaq even. So I would always recommend, from my experience at least, that to really put an emphasis on what the 5-minute and 15-minute time frame is doing more than the 1 minute. But ideally, you do want to use all three time frames to tell you that story and what is higher probability than everything else. Any questions? By pivots, do you mean like levels? For sure. Mm. No worries. I see. Well, while you guys write your questions, let's go over what could potentially happen for tomorrow, because we did close at a very interesting spot. So might as well just be prepared mentally tomorrow to what we might face. Now let's see, what news do we have for Wednesday? Wednesday, we have PMI at 10. And then before that is the NFP. Oh, we have PMI and Powell. Okay. I don't trade doing Asia often, so I have never really experienced how volatile gold is at 8 p.m. So I will not be doing that. This is more sort of a class. Now we do have heavy news going into tomorrow, so it is going to be really interesting. We are so close to all times high. It's always hard to kind of guess these things, but we never came back to this daily fair value gap. We have such a large imbalance to rebalance right here. We have all of this trendline liquidity just waiting to be ransacked. I would like to think that what we're going to do is manipulate to take out these highs, make that exit liquidity for all of the hedges and institutions to exit from, and then it's going to start shorting to aim for all of this. I'm not saying that this entire move is going to happen tomorrow, no, but I do think that we might do this heading towards the end of the week and into next week. Of course, for our preparation though, because that is far, if we take out the all-time high, we're going to be looking for shorts, because I will assume that was the manipulation to wipe everyone that was ever in a short out and for people to secure their longs. and we will be looking for PMI to be bearish to bring us lower, for then PM session to be bullish and to run us to all-time highs again. Possibly. It's always fun to guess. But that would be what I'm looking for tomorrow. I believe NFP is just going to rip it to all-time highs again anyways. And we're going to do that Santa rally that we always tend to do. Alrighty then, fellas. If there's not any more questions, that will be the end of the class. Just going to give you guys a moment to write anything else out. Yeah, trading at all-time highs is difficult. It's hard to gauge what exactly can happen, what's the odds and the probability of it. Yeah, we'll be doing either at 8 or 8:30. Obviously, I'll ping when I hop on, but I need to monitor exactly what goes on, because sometimes trading in pre-market is not very conventional, especially during news days, because the idea is that during pre-market accumulates and during New York it distributes. So that's why for me it's like either I might as well just wait the extra 30 minutes than immediately hop on and stream nothing for the first 30. Yeah, we can check gold. So gold did a retracement and then continued going lower. And so it left out all of this trendline liquidity, but it is looking like it's still trending lower in pursuit of sell side. We can see by how it beautifully respected this 5-minute fair value gap. I did mention that we had hit the weekly fair value gap, so the reaction that we're having is actually a high time frame reaction. Now we are stuck in a 4-hour range, so I'm expecting, that's a wide gap. Gold is going to be really interesting heading towards the end of the week. With this gap in mind, I would assume if we break below the 4-hour consolidation here, we're going to start delivering all the way to fill this up. Hourly wise, yeah, still just consolidation going on. It hasn't really taken out any of the lows. So I believe that we're aimed for lower. We are generating some liquidity here, so we might do some stop rates first before truly delivering. But I think that the draw overall is downside for gold. For ES is at all-time highs again, I imagine. Yeah, ES is at all-time highs. This is a little bit tricky to tell. You can easily tell where all of the trendline liquidity is. Wait, but Nasdaq is making highs right now, is it not? You can see the difference in structure here. ES failed to make highs. Nasdaq made highs, so we have a divergence also going on. ES is definitely the weaker index with Nasdaq holding ground, but ES has all of this trendline liquidity going on right here. My assumption would be with this that ES is bearish. Perhaps during London session, we might pursue this trendline liquidity during the London session, is what I would be thinking. Unless we completely invalidate the structure that we have going on here to make highs again because of Nasdaq. It does require more data. I think there's going to be a delivery during London. It looks like it. So if you guys are trading London, I would wait for that. It does need more data to get that confirmation that we need for it to be a trade even. I wouldn't swing this just yet, but it does look like things are hinted to go lower, at least for ES. Unless we break through this 15-minute BPR, then I'd be sold on the idea that, okay, it's going to push higher first. What time do you normally turn on your PC and prep? What time log in? Do you have a period? It's funny. When I wake up either at 8 a.m. or 8:30. So that extra 30 minutes is kind of me getting some extra sleep. The moment I wake up, I immediately stream. So any sort of chart work that you guys see is me doing it right in front of you guys, straight off from waking up. All right, we're gonna wait for the last text of Boruto to answer that before we end. And just like some of the members requested this class for the recaps, if you guys ever have something you want to learn from specifically, or you feel like you need some advice or guidance on something, you can always hit me up. I'm always open to helping out. I know this is a hard journey to go through, but it's not one that you do alone. You always have you always have people here that is willing to help. Any restrictions? I missed an online AM trade because I restricted myself from trading AM, but that was before I expanded my knowledge. I do have the restriction of not trading the pre-market for sure if there's a really volatile red carpet news. For example, I'm not gonna be streaming Friday because of NFP. That's just me asking myself to get smacked in the face if I'm wrong. If I'm right, for sure the idea is gonna pop off, but I don't want to expose myself to that. So it's not really something I want to submit myself to. Same thing with other news that start at 8:30. If I know it's gonna start at 8:30, it's best to avoid it because you can either expect it to be a lot of manipulation beforehand, or it might try and trick you out and wipe you with a nice little blow to the face. That's kind of the only restrictions I've given myself when it comes to that. I'm still trading Apex. I've been really slow with it though. Since I can't buy evos anymore, I've been just grinding it little. I don't even think about it anymore because at this point I'm just gonna compound it to the point that I get some payouts, but I'm not stressed out. I've been having a way bigger focus on my funded futures, Top Step and Traderfy, and Bullnox. Alright, guys, with that being said, I'm gonna hop off now. I hope you guys have a really good rest of your night, and I'll see you guys tomorrow morning. This was recorded. You guys will be able to watch it again once I upload it, and good night.